From the morning reading, Dow closes above 20,000 for the first time in history. The NDX and SPX new closing highs. Financials regain momentum. Breadth strengthened compared to the prior session slightly as advancers led 1947 to 1077 on the New York Stock Exchange and led 1962 to 809 on the NASDAQ. Some stocks aren't following the averages. The S&P 500 has shown great performance on the surface over the past couple of days, but fewer than 3 out of 4 stocks in the index are trading above the short-term, medium-term, and long-term moving averages. It's rare to see such lackluster participation on back-to-back new highs in the index. The securities that are winning hard. While some stocks in the S&P are dragging, there was a surge in the percentage of securities on the New York Stock Exchange trading at a 52-week high on Wednesday, accounting for more than 10% of all issues. That has led to questionable returns over the next month, but better long-term ones. In other reading, global stocks rally as Dow crosses the 20,000 K mark. All Country World Stock Index hits new record. Foreign Stock Index achieves bullish breakout. So does Europe. Rising bond yields drive money out of bonds and into stocks. Dow Jones Construction and Materials Index hits a new record. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:07 a.m. Mountain Time, and I'm recording this in preparation for the market day, January the 26th, 2017. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and dive into the morning report. And at the time of this cut, slightly mixed on the 4 U.S. broad-based indices, but all 4 of them are rotating right around scratch, so nothing of significance. Crude oil is up about 0.5%. Euro is down about 1/3%. Long bonds are down about 1/4%, and gold is down almost 0.9%. In overseas action, it looks like all the markets are open, and China is up about 1/3%. Hong Kong up a robust 1.4%. Japan even more, 1.8%. Germany up about just under 0.5%, and United Kingdom's up above scratch. In terms of macroeconomic reports for today in the United States, of note, you have the weekly employment claims and new home sales. Looking forward to tomorrow for the United States, of note, you have core durable goods and advanced GDP. Also, the University of Michigan Consumer Sentiment Report, which will be during market hours. In terms of current volatility conditions, short-term VIX 10.06. SKU has eroded. It's still in the first caution level, but nowhere near as high as it was a few sessions ago. IV percentiles are all single digits. The S&P a 7, the Russell a 7, the NASDAQ a 5, and the Dow also a 7. We had now another session where all 4 indices were up by at least 1 standard deviation, and remarkably, the S&P was leading with 2 standard deviation size move. This is a back-to-back breakout, so this is about as strong a bullish confirmation as you ever get, with both the triangle breakout and all-time highs in multiple indices. So very, very, very strong signal. Now, as one of the morning authors mentioned to you, and we'll go ahead and pop over to the charts, breadth was something of a concern, and we've been talking about that, especially with respect to the NASDAQ. But bottom line, you got to keep an eye on that, because that tells you a little bit about what's going on under the hood. You know, a car might be going 60 miles an hour down the road and look like it is performing well, when at the same time things are going wrong underneath the hood and there are signs and symptoms that things may start to collapse or even break down in the near future. So always looking under the hood to see, is that breadth widespread? Are there lots of new highs across all the different important sectors of the economy when things are bullish? These kinds of things. So there are definitely signs and symptoms that you can look for to see just how strong really is. And as we look at the S&P, you see this breakout. We talked about this breakout before it even happened, and with about a 70% probability that it would break to the long side. And not only did it do that, but it broke not just the diagonal resistance, but the horizontal resistance, and it did it in a very, very significant way. Now, that being said, just a second here. That being said, you also had a situation where the overnight last night came within 2 ticks of that initial target we talked about. And that, it just amuses me to no end when I see that. Here we go. We talked about 3,000, and right in front of that round number, it turns and fades back. Now, not a big fade, and indeed right now it's a doji on the overnight action, but still that first attempt at 3,000, that there would be people waiting to short that, or at the very least take their profits and in effect reverse their positions in many ways. That is so typical of performance from a technical standpoint. Now, so where do we go from here? Well, as you can see, and we talked about yesterday, this expected move up was expected to be a relatively shallow move, and we're expecting that this will probably exhaust here shortly. Now, a couple things. When you have a breakout, the usual sequence is a retest of that breakout area, and that often runs about 70%. So we gave you 2 70% numbers here of late, that when you have a triangle pattern like this, it's about a 70% probability that it will break in the direction of the prior trend, in this case bullish. But you also often have a retest. Now, it doesn't always happen. Sometimes it just breaks and goes, and that's why it's dangerous to wait for the retest. But many times it does retest. And given that there's going to be the perception of overhead resistance in the very, very near future here, a retest consolidation would not be surprising. Now, again, this doesn't always happen. We can go back and look at the Russell, and we'll look at that chart in just a moment. And, we had a recent example where it just broke and kept going. So definitely that can happen. But normally the expectation here would be to be conservative with your targets. Expect that, adding new positions at this level is going to be a pretty tough thing to do. Probably going to get a little bit of a retest and then another high. So look for a bull flag pattern to probably set up as our continuation pattern as the next step. That we would come below this area of the apex of the triangle. A small undercut's one thing, but if we were to break below this former area of consolidation, that should now serve as support. That would be your line in the sand to say that, hey, this is deteriorating. The situation, the market condition is changing from the level of bullishness that we had experienced and creating this pattern here. So very interesting situation here from a technical standpoint of late. You also, with the Dow, had a breakout as well, coming off of this little bit of an undercut. And then the 2-day surge taking us through the diagonal resistance, through the horizontal resistance with a strong move, breaking 20,000 for the very first time, and then actually building on that in the overnight last night before stalling. So that's where we are right now with the Dow. Expectations as to where this will likely go. We'll continue to look for bullish continuation patterns until proven otherwise. So on your charts, you should have a kind of either drawn or mental or even alert set as to, when a violation is being occurred, and when that then confirms to say that the posture has deteriorated. Right now, everything is bullish, and until proven otherwise, you should stay with that expectation. We've talked about how the NASDAQ had room to go, perhaps more so than the other indices, because when you looked at the big five, your Netflix, Facebook, Apple, etc., 4 of the 5 had room to go just to get back to their 52-week highs. And certainly with the big move in the broad market, you see that exhibited here, and perhaps even more strongly. So this is really quite a channel here. In fact, give me just a second here. Let's see if we can draw this quickly. I'm not sure I like that as a channel right now. Probably better as a wedge. So this is what you do when you draw. Sometimes you start these things out and then you don't like it, and then you continue to work with it until you get what you're looking for. And I think I like that better. So this would be more of a wedge at this point, a rising wedge. So we'll see where that goes. This may actually develop more into a regular channel than a wedge, but certainly we saw this with the Russell a few weeks ago, where it really just took off in that post-election period, and then eventually kind of broke the parabolic angle. It's a very difficult level or momentum or angle here to be able to sustain. At some point, it's probably going to level off and slow and go into some sort of sideways consolidation at the very least. So let's go ahead and go to that Russell pattern, and we can see what we're talking about. So you had a similar pattern here where it just went parabolic. The angle's too hard to hold. You had a bull flag and then another leg up, and then absolutely into sideways consolidation, even a little bit of a bearish drift in that pattern, forming something of a wedge pattern before breaking that diagonal resistance and resuming the move to the upside. Now the Russell, unlike the other patterns, has yet to break through the horizontal resistance, and certainly it broke the diagonal resistance in this action here 2 days ago, but we definitely have some, and it stopped right at those areas right now. If we were to draw a line across here, we could certainly see where there's quite a bit of horizontal overhead resistance, and it is not yet broken through that. And as obvious, you've not broken the all-time highs like you have in the other 3 indices. So a little bit of a different pattern going on in the Russell right now, but we'll keep an eye on this and see if it joins the others, because we really, in terms of strong bull markets, if we're really going to get a whole series in the S&P of higher highs and higher lows, and so far we really are doing that. Certainly the short-term pattern, we had this big consolidation with the election, the big giant overnight move, but then we get this higher high, higher low, higher high, higher low, higher high, similar low, higher high, and so short-term pattern there is quite strongly bullish, and we'd like to see the intermediate term pattern start to really do that as well. Well, if that's going to happen, you're almost certainly going to see strong leadership from the NASDAQ and the Russell, and we're not quite getting that yet. So there's some signs under the hood that the car isn't quite as robust an engine as you might think it is when you look at the speedometer and all you see is 60 miles an hour going down the road. So in other markets, we'll take a look at those. Crude oil still in a sideways consolidation pattern. A lot of chatter lately, a lot of people thinking that we're going to be hovering in this $50 to $60 range for the foreseeable long-term future. And certainly that's not unexpected. There's a lot of people who would be really happy to have at least $55 a barrel. And coincidentally, for many producers in the fracking industry, this is right around where they're able to be productive and profitable. So they could pay their bills, they could pay those bonds, and they can avoid bankruptcies and bond defaults and all these kinds of things. So there's a lot of companies that are breathing a lot better when price is in this area. Now, would they love it to be 70? Absolutely. And that would certainly bring on the prospect of additional production. So you have this kind of balancing act likely going on in the fundamentals of this industry between what can be profitable and a balance of supply versus the amount of economic demand. And then at the same time, you also have the impact of the dollar. And let's not forget the dollar has a big impact on what goes on in especially commodities like crude oil. And you see the dollar's down here now in a neutral posture inside the cloud. And then, of course, gold. And gold has, run up against this kind of quadruple area of resistance in the cloud after making a very large counter trend move, and seems to be now rolling over. So we're going to be watching and see how far this move goes, if indeed it makes a higher low, or does it come down here and break these lows and set up a lower low. So that's going to tell us an awful lot about whether the nature of this move here was just a big counter trend move in a longer term time frame that is still bearish, or if this was a trend reversal. So this next couple swings are going to be very, very telling in the gold market. In bonds, it would seem that bonds were kind of leading the way for gold, and that you had its counter trend move. It ran into resistance, a little bit lower than gold, in that it actually did this at the bottom of the cloud, natural area of resistance. Gold overshot a little bit. Again, not surprising. Gold seems to be one that just bedevils technical chartists by constantly overrunning areas where you expect support or resistance to lie. And then in this case, bonds have started to deteriorate again and appear to be getting ready to take out this 147.04 swing low and establish a continuation of the prior intermediate term trend to the bearish side. So again, very interesting charts to watch, and frankly, very difficult to be long on bonds or long on gold for any protracted amount of time. Now, gold certainly and bonds have both given us this kind of month plus counter trend move of late. So, that premise was certainly challenged, but we'll certainly be watching to see where this goes from here. Okay, volatility is our next thing to look at, and yesterday we had another new 52-week low. Activity so far today is pressing down again. So, at 10.66, this is an outstanding place to be setting up intermediate term hedges, using volatility products and so forth. These are extremely low levels of volatility, and I've seen some chatter of late that the pricing of protection against big black swan events and so forth is amongst the very most extreme in history. We've had a couple other examples where this has happened, in the past, and usually, of course, those things are met, if not with a black swan event. We're not predicting a black swan event, but certainly that we get some sort of a significant expansion in volatility. It's just a question of when. Now, if you're going to make a volatility play, make sure you buy enough time. A 3-week, used in the February expiration, that might work for you, but a whole lot better to have a couple months and perhaps use that March expiration. Also, from a seasonality standpoint, after about the 6th of February, things start to potentially set up for an expansion of volatility. March, of the best 6 months of the year, which is that period from fall through into spring. March is usually that month that is often the weakest of the best 6 months. So that we would be looking towards this kind of time frame. There'd be some probabilities that would kind of set you up for that. Okay, been going a little long recently. We've had a lot of really interesting things going on. So let's get into the daily report and hit the highlights of changes. Remember, we're always focused on change and rate of change. And some of the changes that we have here today with these strong moves, we've moved back into a more outright bullish intermediate term phase opinion, where right now we're looking at market phase 4, which is described as price patterns near resistance or extension. And certainly we are in an extension pattern right now, but that is bullish. From the 3 market timing signals, all mechanical in nature. The first one coming to us from IBD, confirmed uptrend, that's bullish. GMI index, a perfect 6 out of 6. GMI 2, the more sensitive one, a perfect 8 out of 8. As strong a signal as you get there. Buy signal have been in place since 11:10. If you had held all the way since 11:10, you certainly have benefited. From the 3rd market timing signal, stock charts, decision points, scoreboard status, this one still remains mixed. I'm a little surprised some of these short-term signals haven't started to improve. I suspect that we're getting pretty close, but we still, bottom line, the current signal on the indicator is for mixed on the short term across multiple index, as well as mixed on the long term across multiple index. This is part of the reason why our expectation for these new highs is for nominal new highs. And then if we get a pullback, that we're likely to have nominal pullbacks. So expect some largely sideways, largely choppy with an incremental bullish bias. Position sizing opinions are 100% on both models. Intermediate term market posture, exceptionally strong bull, supported by an exceptionally strong bullish sentiment line. And you see the benchmark 86.1, everything good there. The Dow about to cross the threshold into exceptionally strong bull as well. NASDAQ, the leader here, and the Russell on a second day back into the bullish camp, now weak bull. Hedge warning status 0+, normal with some elevated conditions. This is, while bullish, making all-time new highs, is not yet a strong bull trending market with a clean series of higher highs, higher lows, and a progression. We're not quite there yet, but we certainly have had a lot of improvement in our market posture, and we're getting as close to as level 0 as we probably have been in quite a few months. In terms of strategy opinions, no change from yesterday. This option income one is the one with the kind of the asterisk with it. VIX is well below the acceptable range to initiate new positions for novice traders. When you're trading with a VIX that's in the 10 handle, it's very difficult to get enough premium to truly justify the amount of risk that you're taking on as a novice trader. The expectation of an expansion of volatility will eat you up if you're not prepared for the adjustments and so forth. More aggressive traders can, power through. They know what to do, but it's just something to keep in mind if you consider yourself a novice option income trader. In terms of specific areas of warning into the volatility area, again, much like has been the norm lately, most of these are pointing to an expansion of volatility kind of condition expectation. Distribution day count continues to drop. NASDAQ back down to a 6. We've been as low as a 5 in recent sessions. If we can tick back down below 5, like you see has happened with the S&P, that goes to less than warning status. Skew somewhat elevated, about a 9% probability of a 2 standard deviation move, but nowhere near what it was a couple sessions ago. Trend-based, everything hunky-dory here. Actually, this should say a 4. And look at this, new highs, new lows. Yesterday, 643 on the new highs side versus only 73 on the new lows side, so strong there. Intermarket risk aversion indicators, we had improvement here, so fewer warnings. We've had 2 of these go to risk on, and then one is rolled up and just about ready to cross over, so I put it in kind of a neutral kind of status. Bottom line is this is much improved from what it's been in recent sessions. Sentiment's actually ticked up a little bit, as you would start to expect, as things start to get, stronger, more bullish, and these extension patterns. You'll start to see this sentiment index start to move, up towards the 70s and even into the 80s. From a sector specific, you see yesterday, strong day, up about 0.8 on the overall S&P market. Financials leading the way, very good sign for the bulls. Whether you love or hate banks, bottom line is your index loves banks, and your index investments will not perform well in a strong bull trend marking without the banks performing well. So this is very much a risk-on kind of picture. Financials, industrials, information tech, materials, of course, a lot of chatter about, infrastructure and building walls and building pipelines and repairing bridges and so forth. That's going to make this material sector, go absolutely on fire. Energy also having a good day. Really, the only thing that didn't have a good day was one of the two telecoms was negative, and real estate, which is more of a defensive interest rate related sector. You see utilities down here as well, consumer staples. So the more defensive sectors were definitely where the money was coming from and rotating into these higher beta, higher risk on, higher growth opportunity kind of positioning. And you see this reflected in the market posture by sector, by time, and indeed healthcare and retail, utilities and telecom, amongst our weakers, and then the others lining up as better places to be in the various time frames. 1 month performance starting to look stronger now. And as you get out of that consolidation and you start to build, now we start to see some real separation where like telecom down 4%, but on the flip side, you have materials up 5%, information technology up 4%. So, and then consumer discretionary, another risk-on area, up 3%. So these risk-on areas, they're the ones that are leading the charge on the breakout from this consolidation. So that's important to note, both from how you might be structuring your watch list, how you might be looking at your opportunities to trade new positions to the long side, but also in a measurement of just how healthy this risk-on move is. We need this to not just pop, but to sustain and start to really build for this to become, what we consider a strong bull trending market. Not there yet, but getting better and better. Okay, that's enough for today. And we've got to go ahead and get over to our disclaimers. Disclaimers, as always, hit the pause button if you need more time for the disclaimers. Also note the hyperlink down here at the bottom of the slide for the full set of disclosures. Sorry about going long, but hopefully you found this very useful. And share it with your friends, share it with your trading buddies. Certainly, we're just about on the threshold of hitting 300 YouTube channel subscribers. We certainly appreciate your support for this free service. Good trading.